warm welcome. Thank you all for joining here. Feels really, really good to be in a live event where we can see people face to face, shake hands, exchange cards. So what we're going to do today, my build is to talk about the payments and lending overview. What I would want to achieve at the end of 30 minutes is really, at the end of 30 minutes, hopefully you will know as to why payments and lending, why we are having a conference on payments and lending, right? Why is it so important? Why is it such a hot topic? Why we are talking about payments and lending, right? It could have been a payments conference and a lending conference, but why we have a payments and lending conference in one go, right? So, with that, and, of course, through my presentation, you will hopefully know more about, why are the topics that we've selected, why are they important, right? So again, let me, just talk about what we're going to cover today, right? So, in the next 30 minutes, as I said, we want to really understand the payments market in India. We will then look at what kind of lending opportunity you have right now in India, and why are we talking about it so much. We'll cover a little bit about the blurring of paytechs and fintechs and lendtechs, if I could use those words, right? And then, of course, we want to leave you with some thoughts of what IBSi thinks is going to happen, could happen in the future. There you go. Thank you. All right, so let's get started. So this is what we'll cover today. As a firm, we have more than 800 pages of research in our agenda, in our portfolio. We cover more than 60 companies in the payments and lending space, and we're really talking about very detailed information that we have for each of these vendors. It's the 21st year of the sales league table, the iconic sales league table, where we rank the top vendors. 5,000 plus deals captured in vendor sales vision, and more than 400 thought leadership pieces and articles across all the offerings that IBSi has. And this is a selection of the companies that we cover. Of course, there are a lot of companies, the broad companies which have offerings across the financial services industry, and also very specific niche companies in the payments field, in the lending field. So I would say we have everything covered. All right, let's jump in. So, starting off with the global payments industry, it's something that is growing at a very significant speed. We've seen a doubling of the transaction value in just 5 years. India is at 250 billion out of, could be at 250 billion out of the 14 trillion, which is about 2%. Doesn't sound much, I know. I would say it's a glass half full. It's a good thing and a bad thing. A good thing because, there's a lot of room to grow. And of course, I'll speak about it in a bit. We're seeing the whole the payments industry growing rapidly across all geographies. So the chart on the right, I know it's small, but it's growing significantly across all the geographies. And the bullet at the bottom right, it's 64% is driven by digital commerce. So something that is obviously slated to grow as we go forward. Right. So looking at the timeline, the 2016 when the demonetization happened, for everything that was written and said about the positives and the negatives of demonetization, one thing that definitely happened was the adoption of digital. I think that was kind of an inflection point for the digital payments industry as a whole. All of a sudden, everybody wanted to be on the bandwagon. Everybody wanted to, pay digitally. I remember, I took my first baby steps then, jumping out of. So I would do NEFT transfers, but Still using a digital wallet was new for me. So started off there. I think going, if Sanjeev mentioned about how the telecom revolution helped, I think closer to the 2018, 2019 is when, we had more players come in, Reliance Jio come in and just exploded the way all of us actually consumed the internet. 2020, when again COVID happened, again a big inflection point for the digital commerce to happen. Everybody started going online. Everything started going online, right? And that helped the digital payments industry. 2020 we have new drivers, if I may. We have BNPL there, we have cryptocurrency, we could have digital currencies. So lots of exciting things happening. And of course, not to forget, all this was possible because we had things that we had in the past, right? So it didn't come overnight. We had, the formation of NPCI in 2008, and that actually has built on, right? And that has allowed us to actually have a strong foundation in things like the UPI, the NEFT, and all of that. So I think the whole journey, if you take it into perspective, one thing has led to the other, and that's where we are right now, in a very strong place. Again, talking about numbers, as Sanjeev mentioned, right? Just in the past 5 years, we have grown 2x in terms of value of digital payments in India, and 6 times in terms of the number of transactions, right? So if you actually look at the bullet below, right, 70% of the transactions now happen on UPI, and it took 4 years for UPI digital transactions value to cross 3 million mark, and after that, within 1 year, we went to 7 lakh crore, 7 trillion, right? So a huge achievement. You can just from the numbers, you can see the kind of adoption that we are seeing in the market in the past, in the past 3-4 years, but even more accelerated in the past 1 year or so. And the good news is there's room to grow. I love this graphic. There's rockets waiting to just started. You can still see the rocket, and maybe in a year or two, the rocket will disappear from the slide and it will reach the space, right? The reason why I say there is room to grow, if you see the chart on the right, right, the digital payment transaction value as a percentage of GDP stands at 4%. And if you look at the other countries, which I would say are comparable, in the same range in terms of developing and the kind of technology, they are way ahead. And that's just, it's in simple terms, there is a lot of headroom to grow. And I think that is what, what we are really here for, right? This is why the reason why we are here. And, again, a large portion of population in India still remains underbanked, unbanked, and the potential is, out there for everyone to tap into. What are the trends, right? What are the trends that will help the, the growth, right? Of course, everyone knows businesses are moving online. The traditional businesses, of course, were slower to go. But I think even groceries and everything is starting to go online. Even niche services. When we were doing the research, even things like pet grooming and everything is online. Right? If you don't have an online presence, you probably don't exist. That's the reality of the new world, right? And who knows, in a few years from now, it could be metaverse. That could be the next frontier, right? Of course, from a technology standpoint, we're also seeing UPI Lite. So even if you don't have internet connectivity or good internet connectivity, you can still do it. Contactless transactions, wearables. Again, all these are convenience factors that once you get used to, you're never going to go back. That's the beauty of these services. And finally, digital currencies. I think that's something that, it's something that no one has really managed to figure out. But as a country, Nigeria has gone live with e-Naira, and India is wanting to, slated to go live with its digital currency in 2023. Could be a game changer. Maybe in the sessions ahead, we could have speakers talking about it. It could be a game changer. Imagine, we having paying through digital currency, and we have an account with RBI. We don't know what's going to happen, right? But yeah, that could be the future. Very well be the future of payments, right? Talking about numbers, Sanjeev again alluded to so much money flowing into the whole industry. And just the top line there, right? It's payment startups, they secured 2.6 billion in funding in 2021. That's a huge number. That's like that's something that's, you can just say the kind of opportunity that everyone around is seeing in the industry and wants to be a part of, right? And of course, lots of, names that we know, some of the names we may not know. So a lot of these startups are in the field disrupting the way we do payments. Okay, moving to the second bit, which is the lending opportunity in India, right? Now this, again, talking about numbers first, right? This is going to be a 71 trillion opportunity by 2025, growing 2x in the past 4 years and expected to again grow 2x, close to 2x in the next 4 years. A huge opportunity there. Home loans are going to be something that will drive it as well, continue to drive it. But there's a sharp rise in the micro loans, the digital micro loans that are getting approved. That more and more people are eligible for such kind of loans. And of course, the technology doesn't stop there. We have paperless onboarding, auto approval, everything instant happening, and it's possible thanks to all the right regulations coming at the right time. And yeah, the opportunity is huge. Want to talk about the long-term factors that are supporting this opportunity, right? Bill Gates once said that we as professionals, we tend to over-imagine the changes that are going to happen in the short term, but it's the long-term trends that are really going to drive. And these are the long-term factors that are going to support the lending story come what may. It could grow here or there, 10% here or there, but these are structural stories that will help the lending growth, right? I'm going to spend a few minutes on this one. So, we still have a relatively, low credit to GDP ratio, right? Just tells you that, there is, again, a lot of headroom to grow. We are at 22%, whereas other countries, UK is at 90%, 79% for US, and even China is at 62%, a very comparable geography, right? So just if you look at the number, clearly, there's a growth of 40% that's just waiting to happen in the next few years once we have all the right things in place. Second, the growing GDP of per capita GDP of India is among one of the highest across the globe, and we've seen a very strong correlation between per capita GDP and the ability and willingness to take credit, right? And simply that stat tells me that there's going to be an offtake in credit going ahead. I think demographic profile, I don't need to talk much about it. Our dear Prime Minister has been talking about it for the past few years, and I think this probably could be the last decade where we have the benefits of the demographic dividend, as so to say. But people are more confident. People are more confident about the way they can earn, the way they can repay, and they're more willing to take loans, right? So that demographic profile is going to help the long-term structural growth for the lending industry. Financial inclusion, again, we've gone from just in the 4 years from 2014 to 17, we've gone from 53 to 80% of people having bank accounts. And in the past 4 years, that particular number is actually starting to not just grow in banking accounts, but across different financial services, right? So now people are more educated in terms of what kind of avenues they have to turn to when it comes to lending. And they cannot get, they cannot get fleeced, so to say, right? So that's again a very important factor. The psychological shift in behavior. I want to, again, when I look at myself, when I look at my parents, look at me and the way I interact with my junior team members, right? It's a completely different way of thinking. My parents would be, you should be living within your means, and you shouldn't be taking loans and, doing things. Maybe you can take a home loan at max, right? But nothing beyond. For me, I think I can take personal loans once here and there. I of course use credit card, do some revolving on the credit cards, but that's about it. But the generation from here on, right? They want instant gratification. And it's not a bad thing, let's not put instant gratification as a bad thing. They want it now. They're willing to take loans for lifestyle, for education, for travel. Their willingness is there, one, because they feel confident that they will be able to earn, they will be able to repay going forward. And that confidence is allowing them to earn. I think the other thing is also the lending rates. I was just speaking to a few of the delegates here. And the lending rates could have been 5% per month. That's insane, right? And that kind of lending rates, again, contributed to the fact that our parents would say, don't take loans. But now the interest rates are more meaningful, closer to the 20s to 30s. So again, that's also contributing to willingness to take loans. And of course, finally, India is digitizing, and I think I put those 3 dots and rapidly. Just throwing a statistic to you, India right now has 76 crore people with internet, and that's slated to grow to 100 crores in the next 5 years. Which means, I think literally everyone will be able to access internet somehow or the other. Aadhaar cards, again, a very silent revolution that is also helping lending. That revolution is, again, number for you, Aadhaar cards, 129 crore Aadhaar cards issued, which means, we're there, out of 140 crores, 129 crore people have Aadhaar cards. So we have mapped India, right? All these silent revolutions that are happening are the ones that are going to, support the lending growth story. As I said, maybe it will be 5% here or there, but that story is going to remain intact in the coming years, thanks to these strong structural factors that we have in India right now. And where are the growth pockets, right? If you think about it for a moment, the growth pockets are going to come from the underbanked. Currently, people who are underbanked and unbanked. Simply, you cannot have branches everywhere in every city, every village of India. But that's where the growth is going to come from. So if you look at the numbers again, the percentage of secured versus unsecured loans that's been growing in the past few years, expected to grow even faster. The bottom left chart there talks about how the lending is happening more and more in the smaller cities. So you see the small box there growing from 44 to 46. I know it's just a 2% increase, but bear in mind that there is rapid urbanization happening. So people are moving to cities, yet the growth of lending is higher in the villages. So that number is going to be significant. On the right side, it's going to be MSME loans, the small merchants who otherwise they may not have enough data to put up, not enough collateral to put up, and that's where the lending is going to happening. That's where the lending is going to happen. And finally, the personal loans, and the BNPL, of course, is going to be one of the major driving factors. Again, I hope that you will learn more about it as we go through the day. But yeah, BNPL is going to be one of the biggest ways that people are going to consume personal loans, slated to grow six times. It's not 6% CAGR, it's 6 times. That's the kind of number that we're talking about. And of course, you cannot do it through the traditional ways. You cannot penetrate into these pockets, the growth pockets, through the traditional ways of having a branch everywhere, every city. No, you just can't do it, right? Just, simply from a point of view of economics, it won't work. And that's where the digital lending comes in. That's where the alternate data comes in. Today it's not just about your CIBIL score. It's about so many other things. It's about, if you can buy now, pay later on, let's say a Flipkart, they will start off with a 2,000 rupee BNPL, and then you have a better repayment history. They will increase it to values of 20,000, 25,000. And these are the places where the loans are going to happen. This is where how BNPL comes into picture. Of course, there is lots and lots of other data. Even if you look at things like the GST filings, that's kind of alternate data that companies have access to now, right? You have mobile data, travel data, utility bill data, all of this data. Earlier, you would say this data was there earlier as well, but the way you could consume it or the way financial institutions could consume it was not there. That link was missing. But thanks to the digital revolution, what's happening is that link is coming. There are more players who can actually come in and help in the value chain, right? That's making it more economical, more feasible, more viable. And if you see on the right-hand side, technology is also driving down costs. It's driving down costs across the board, right from acquisition to collection, right? And again, it's making everything feasible. You don't need to lend at 30, 40, 50%. You can now actually lend at 20%. If you look at the yield, that's been going down. The difference that you need to charge, that's been going down by 50 to 120 basis points right now already, right? And the digital revolution is yet to happen. So you can expect the yields to, or the interest rates to actually go down thanks to competition, thanks to all the operational excellence that we are experiencing, right? Again, numbers, big numbers here as well. We had lending startups getting close to $1 billion, right? So a lot of people, can see the story here, and they are interested in being part of the story. Okay, now the reason why we have the payments and lending together, right? Now, if you think about it, again, the MDRs or the merchant discount rates, thanks to UPI, have started going down. And all the payment companies that earlier could only depend on payment revenues, they have to find new ways of generating revenue. And I think that's where the data that they have, right? The data, all the payment data that they have, that's what they're trying to monetize, right? They have data about who is buying how much. They have data about which merchant is able to sell how much. Simple things like, if you go to Amazon, that as a buyer, I'm tempted to purchase from someone who has a rating of 4 and higher. That's again alternate data that the merchants can use, that the payment companies can use for giving out loans to merchants. And you will see all the large pay techs, if I may call them, are starting to become lend techs. They have big aspirations to lend, which is good news for the customer, which is good news for the Indian rural customer, if you will. Paytm has big plans, Bharat Pay, Amazon, Phone Pay, Google Pay, name anyone, and they want to be in that space. The good news is that there is enough and more room to grow, right? And from a banking and NBFC side, they have three really good friends, if I may call them. It's the consumer trust that they already built. It's the cost of funds, which is obviously lower than the pay techs have or the lend techs have, and the regulations. I think these are the three friends that they have. And the best way forward is to collaborate, right? It's the best way for banks and NBFCs to collaborate with fintechs. Fintechs have the data, have the innovation with them, and banks and NBFCs have the customer trust, cost of funds, regulation. So coming together, I think lots of examples already happening, and should happen, would happen, and definitely going forward will become a big part. Some ways to deepen the collaboration strategies, I'm going to jump over because someone from back there is signaling the time is up. But again, ways for banks and NBFCs to collaborate in a much deeper manner with fintechs. And of course, what to look out for in the future, right? I know there are 10 key takeaways that we see from IBSi as to could be happening. If I take, even if I spend 30 seconds each, it will be 5 minutes. So I'll not spend so much time on each one of them. But again, most of them are, to be honest, self-explanatory, if you will. I think the whole, shift that has happened thanks to COVID, I would say that is irreversible. That's not going to go back. We are not going to roll back that digitization. The acceleration is happening. The open finance is happening. People want to connect with each other. They want to collaborate. Regulations are there. You have, at the bottom, you have the NBFCs coming in, the fintechs coming in. That's going to become bigger and bigger phenomenon. I think, going forward, if you think about it, I'm sure there will be some kind of a umbrella organization, regulatory side for lending. We have the National Payments Corporation, something similar, right, with the boom in the lending market. Digital currency, I think that's going to be, who knows what's going to happen out there. Fraud management, very important going forward to make sure that when we are going into the small ticket size loans, you want to make sure you're able to, choose the right loans. And finally, follow the customer, foray into metaverse, possible, not possible. Maybe we will, find out later today. But yeah, that's me. That's what, that's hopefully, gives you a perspective of why we are doing the Payments and Lending Conference. Why is that such a hot topic? And with that, I'm going to hand it back to Tim. Oh, to Robin. Thank you.